everyone, and welcome to IBD Live. Who's ready for Who's ready for some hot stocks for breakfast? Who's seen IBD Live before? Show of hands, anyone? All right, I see some hands. So for many of you, it's your first time watching. Let's see, first timers. All right. Welcome to the show, everyone. I'm Ali Coram, multimedia content editor at IBD. And joining me, we have our finest stock analysis experts at Investors Business Daily. Joining me on stage here, we have Harold Morris. He is Senior Product Coach at MarketSmith. We also have Justin Nielsen, our Market Research Director and host of the weekly Investing with IBD podcast, and Chris Gessel, our Chief Content Officer. We're so excited to be here live from the MarketWatch Best New Ideas in Money Festival from New York City. We also want to give a shout out to our subscribers watching us at home. Hey everyone, great to see you as well, and our virtual audience joining us today. Now, we have 90 minutes of non-stop analysis for you. No scripts, no commercial breaks, just great analysis with our panel talking about potentially actionable trade ideas. We also are going to break down the team's take on market conditions, what we should be watching for the Fed announcement later today, all with the mission of helping you position your portfolio no matter what current market conditions are. So you guys ready to get started?
Let's do it.
All right, well, a couple of things to go over. First, IBD Live is for informational and educational purposes only, so please make sure to do your own research before making any trade. We are not making trade recommendations. We are going to be taking a look at a lot of tickers, and we also will have a lightning round coming up at about 10:40, where we are hoping to answer your questions about tickers, any other burning questions that you have for the panel. We're excited to get to that in a little bit. All right, but we also have Justin with the news headlines. Justin?
Yeah, this is a little bit different. Usually this is Ken Shreve doing this, but he was kind enough to write these up for me, so I'm just going off of his notes. I'm just going to let you know how the sausage is made background here. So we're no longer in the futures. Things are up, right? Markets, we heard that opening bell. We were like Pavlovian response, ready to get out here. So we've got the futures. They were up earlier in the pre-market. We're still up. S&P 500 undercut Friday's low. So did the Dow Jones Industrial Average, so did the Russell 2000. They all undercut Friday's low, but the NASDAQ was the one that held up yesterday and rallied nicely off the lows for the third straight session. 10-year yield was down 2 basis points to 3.55 yesterday. US dollar at a 20-year high. UUP, which we often use as an ETF to kind of track that, was up at 0.5%. Now, of course, all eyes are on the Fed today. That is coming up at 2 p.m. Eastern when the Fed announcement is going to come out. Everyone's pretty much expecting a 75 basis point hike. There is a small chance, maybe between 15 and 20% is where I've been seeing it volley, for a full 100 basis point hike. So we'll see if that happens. And then, of course, Powell is going to give his comments. So expect a little bit of volatility. That typically happens as people kind of digest any word changes, we all remember when transitory was the word behind inflation briefly. Right. So investors' intelligence, this is a contrarian indicator that we use. The bulls fell to 30% from 32.4%. So bullish sentiment was at 30 in March 2020, just before a market bottom. Defense stocks are higher after Vladimir Putin called up 300,000 troops following some key setbacks in Ukraine. And Putin has also raised the threat of a nuclear response by saying in a televised address he's not bluffing about using all instruments at his disposal to protect Russia. So we had Raytheon, Lockheed Martin, Northrop Grumman all up in the pre-market. Crude oil futures were also up. Natural gas was also up. Bitcoin was up to around 19,200. WSJ was reporting that crypto exchange operators Binance and Sam Bankman-Fried's FTX have both bid around $50 million for the assets of the insolvent crypto lender Voyager. We also have Apple was up in the pre-market. Report from JP Morgan says that Apple could shift 25% of iPhone production to India by 2025. General Mills, not necessarily a big growth stock, right? But hey, some of these food stocks are what we've been looking at lately, holding up well. Earnings beat, revenue in line, guides full year earnings and revenue above expectations. General Mills GIS was already at new highs ahead of the results, poised to gap above the 50-day line. Chemours was a weak performer in the chemical sector. Company cut its full year EBITDA guidance, citing lower demand in its titanium business. Then Arista Networks, this network that we've been watching, ANET, Barclays upgrades to overweight from equal weight with a 131 price target. Oil refiner, PBF Energy, JP Morgan upgrades that to overweight from neutral. Also in the refiner group, Wells Fargo downgraded. HF Sinclair, the ticker symbol on that is Dino. Not liquid in pre-market, but we'll see how that's trading. It went from equal weight to overweight from Wells Fargo. And then Micron Technology, Mizu downgrades to neutral from buy, lowers price target to 56 ahead of next week's earnings report. And then finally, Nike also reports earnings next week. Deutsche Bank maintains buy rating, lowers price target to 123 from 130. And that's the headlines. I'll toss it back over to you, Allie.
All right, thank you so much, Justin. Now let's turn our attention to analyzing current market conditions. We'll first take a look at the NASDAQ composite here, Chris, and I also want to pull up QQQ, that's the NASDAQ 100. What are the key levels that you are taking a look at? I mean, if we zoom out to a weekly chart, it's been a really tough year, but what levels should we be keeping an eye on now, and could that all change today depending on the market reaction to the Fed?
Absolutely. So we've held above the lows of last week, and those were just a little bit above or below the July 26 lows. So we're keeping an eye on that level, and if we take those out, then the June lows are in play. So that's the most important thing right now. On the upside, we got a lot to get through. We got to get back above the 50-day moving average.
Yep, that's that red line on the chart here.
Right, and then that declining 200-day. And for most of us, until we're above the 200-day, we're not going to be aggressive in the market. We'll maybe play some swings, but respect the trend of the market right now.
Yeah, that's another great point to point out. Given the context of the environment that we're in, it's not a time to be aggressively making bets. Why is that?
Because bear markets typically go down, and
what about
that's
shorting
the nature
then,
of the beast.
What about shorting then, Justin? Should I be shorting here?
That's a great question, but whether you're long or short, you really want to have an edge to it. Right now, it just doesn't seem with the volatility that you have an edge either side. So for me, the risk reward just isn't there. And until it is, I'm not going to be shorting aggressively. Now, there have been some examples where, as you pointed out on the NASDAQ composite or on the S&P 500, when we were up at the 200-day moving average line and then we reversed, that's when you short. Not when you're getting back to lows, because then it's like, okay, this is starting to get a little bit too obvious. And when everyone starts asking the question, should I short? That's the wrong time to do it.
Exactly. Harold, what are your thoughts on how investors should be positioned ahead of the Fed today? Are there any opportunities either for a market play or on an individual stock level, things that we should be nibbling on right now? I know that's a term you guys like to use if it's a small sort of test position, maybe not getting aggressive, but putting some feelers out there. What do you think?
Well, I wouldn't be putting any kind of feelers out there. I wouldn't be doing anything as far as taking a position in a stock because of this upcoming Fed announcement. Regardless of what stocks you're holding, regardless of what the Fed's going to do, you need to have an exit strategy in the event that the market doesn't do what we think it's going to do. So have an exit strategy and be ready.
Yeah, be prepared, have a plan. We don't have a crystal ball, of course,
Yeah,
but
mine broke, so.
oh yeah, too bad. My magic
Yeah,
8 ball
yeah,
left it at
flip out
home.
here, bro.
Yeah, but preparedness and scenario analysis of what if this, then this is my action plan. So for you today, what does that look like? Is there any scenario where you would be adding exposure today?
It would have to be after the Fed, whatever statement they make. I think the market's going to react to the Fed statement. So whatever that is, I'll be looking at my stocks, and then I'll act accordingly.
All right.
I don't know what I'm going to do because I don't know what the market's going to do. So I'll wait and see.
Yeah, Chris, I mean, for active investors in this market, being on the sidelines right now, at least for the most part, that's a way to generate outperformance, right? To be ready for when conditions warrant that better risk-reward ratio.
Well, that's the strategy we've been following on Swing Trader, where we're doing shorter-term trades, and a lot of times there just haven't been trades to make, so we've had high cash exposures, and so we're up slightly on the year. What's the S&P down?
18%, 17-18%.
So 20% outperformance.
Yeah, exactly. All right, well, let's get some tickers from you guys. What should we be focusing on today? That's also something we do towards the beginning of the show. Skipped that part a little bit. So let's maybe tease a couple of potential either trade ideas or at least watch list stocks. Justin, what do you have for us?
This is one that we've been talking about, still on my radar, Wolf Speed. This is formerly known as CRE, and I just recently had someone on my podcast that was kind of, giving me a little bit of the scoop on this. It's really interesting, when you've got these EV plays that have the traction inverters and, they're using silicon carbide. And so, you look at the SMH, which is the VanEck Semiconductors ETF, that gives you a sense of what the semiconductors are doing. Then you also have Wolfspeed and On Semiconductor that look very different from those, the typical semiconductor. So whenever you see something that's acting differently, you have to kind of question, okay, what's going on here? What's different? Why is it showing so much relative strength to the market? So Wolfspeed is one that is continuing to be on my radar.
All right, thank you, Justin. And Chris, what tickers are on your radar at this time?
Well, I'm still looking at a lot of biotechs. They're showing a lot of strength, and they're showing the action that we often see towards the end of bear markets, where you start seeing stocks showing relative strength, and then they can turn into the big leaders of the next cycle. So that's why we're interested there. Vertex is one, VRTX. And then for something moving today, you had mentioned Northrop, and that is gapping up out of a little base. So let's take a look at both of those.
Okay, great. We'll keep our eyes on that. Harold, what do you have for us? What should we keep at the top of our watch list right now?
I'm looking at ticker symbol CAH, that's Cardinal Health. What I'm looking for in this market is stocks that are showing relative strength. One real easy way to determine relative strength is look at where the moving averages are. Anything above the major moving averages, you look at the market, they're all below the major moving averages. This stock and other stocks that I've been watching are above it, so that's what we consider relative strength.
All right, thanks team for those tickers. I want to get a quick pulse from the audience. How are we feeling? Who's bullish out here? Who's bullish right now, huh? I mean, from the panel's comments, I can see why.
Maybe you should have asked that first.
All right. I should have. All right, so who's
Is it a tainted
bearish?
audience?
Yeah, maybe a little bit skewed now, skewed poll. So who's bearish out there? Huh? Feeling a little bearish? Who doesn't know? Who's, who could go,
I'm with you there.
Right?
Yeah.
So we'll be ready for anything. Justin, your thoughts on investor sentiment right now?
Well, as we were talking about the investors' intelligence, this is something that went way back, and what they were doing was, hey, you know what? Let's just kind of get a profile of what the professionals are thinking, the newsletter writers. These are the guys that everyone is thinking know what they're talking about. And, so he was thinking, okay, we're going to provide this information so we can see where their thinking is. And after years and years of data came out, he discovered that it was actually not doing what he thought it would. It was contrarian, right? Once those newsletters got overly bullish, that was typically when things were topping. And when they got overly bearish, that was usually very close to a bottom. So the fact that we're seeing that bullishness come out is a good thing. Now, these are secondary indicators. So we want to be very clear that when we're really kind of trying to do any type of market timing, we're going to look at the price and volume of the indexes, of the stocks. We're not going to be trying to use these secondary indicators to time a bottom or a top because they're just not that good at it. But they kind of give you a sense of, hey, this is the conditions that you're in, and then you can play accordingly.
Great. Now, Chris, I also want to go to Thinkorswim from TD Ameritrade here because there is a little bit of extra context on the technical side that you would like to provide. This is the QQQ NASDAQ 100 intraday chart. We've got an hourly chart pulled up.
Right.
Please break this down for us.
Well, the interesting thing is we always look at price and volume. Price on its own is interesting, but once you add volume to it, then you really understand is there power behind the move up or down. And so if you look at this chart, over the last 4 weeks, you see nothing but red spikes. There's maybe a couple blue ones, and in the last 2 weeks or so, all red. So there's been, whenever the market starts making a move, it's more heavy volume to the downside. So we'll see if that changes today with the Fed and the market sentiment changes. But for now, I think this chart really tells you a lot about what's going on.
Yes. It definitely does. Now back on over to MarketSmith here, Justin. Any other levels that we should be keeping an eye on here today, just for added context there? I know we talked about short-term levels. What are maybe some other secondary indicators telling you in terms of, hey, are we at oversold levels? Could we see a bounce here with that sort of contrarian mindset perhaps in mind?
Yeah, you know what? We have been seeing some oversold levels, and this is something that we note. But again, it's one of those secondary indicators. We're always recognizing that you can get oversolder, if that's a word. It doesn't mean that you can't go down more. So again, it's a secondary indicator, but it gives you an indication. Hey, there has been a lot of selling already, and that's one reason why we don't necessarily want to go short when it's already oversold, right? That's you want to be kind of going on the other end of things. And so in terms of other short-term levels like that I'm looking at today, nothing that I'm looking at today. I want to take a little bit of a broader view. It's very easy to get whipped around and get too excited if you're looking at the intraday chart and saying, oh, there's something moving now. There's something moving. The fact is, the market just hasn't been trending that well lately. It's been going a little bit back and forth, and if anything, the tendency has been on the downside. So I'm going to need to see a little bit more power. I'm going to need to see not just one day that's strong. I'm going to need to see a few days, the volume improving, like what Chris was talking about. I mean, even before Labor Day, you had heavier volume on the downside, and then we got back from Labor Day, you'd expect the volume to be higher. We had a little 4-day rally, and then no volume behind it. So some of those things just have to improve, and until they do, there's just not much reason to stick my neck out there.
Mm-hmm. All right, well, great context there as we now take a look at some of those individual stocks here. Harold, let's kick things off with you and Cardinal Health, ticker CAH, as you mentioned, up about 1.4% right now. Volume may be a little on the light side, but wow, this move from the 50 level over the summer, it's really seen some strong gains as of late and is holding up as we're seeing a lot of things break down, so that relative strength is there.
Yeah, the relative strength is definitely there. What attracted me to the stock was the support at the 21-day exponential moving average. That's the green line on the stock. If you go to the weekly chart, you'll also see there's support at the 10-week. That red line on the chart is a 10-week moving average, something we keep a sharp eye out on because stocks, they'll tend to come down to that 10-week and reverse off of it. So that's what this stock has done. So it's got two things going for it. Again, the support on the weekly chart, support on the daily chart. That's what attracted me. Doesn't mean I'm going to buy it now, but something I've got a sharp eye on.
Mm-hmm. And so if we weren't in a bear market, Harold, would this be something that you would want in your portfolio? We're going to get you a mic, Harold. We need all the insights loud and clear from Harold today. So. Pretend you're now a singer.
Drop
the mic at the end.
Yes, exactly.
But anyway, so right now, Cardinal Health, it's about 4% above the 10-week line. So again, bear market aside, is this the kind of setup that you would be interested in adding to your portfolio?
Definitely. If we were not in a bear market, I would definitely be very interested in putting some money to work into the stock. Right now, because of the Fed and what we expect with the market, or what we don't expect, we don't know. I'm just going to hold off. I expect the volume to be light today, so we'll see what happens come almost at 11 o'clock, but 2 p.m.
2 p.m., yeah. At 3.
Yeah,
right.
I got to do the math for all our LA folks here.
Yeah, right.
So let's also give the audience a little bit of insight into how we think about sizing positions for active investors. Meaning, how much of my portfolio would I allocate to something like this? Again, bear market aside, but it seems like if you have a strong stock, say it's checked off all the boxes on a technical perspective, and I know we get in the weeds a little bit here on the charts. We're chart nerds up here, but the fundamentals are important too. So say it's checked off all of those boxes. It's got the right setup. You have the market on your side. Then how do you think about, all right, how much am I willing to risk here to place a trade?
Right, so first off, it all starts out with the fundamentals. Okay, so if it doesn't have the fundamentals, pretty much not interested in the stock.
And what do we mean by fundamentals exactly? That's that
sales,
revenue growth?
Earnings, all of it, sales, earnings, profit margins, return on equity. Those are the kind of fundamentals we like to look for. Once those are in
Yeah.
place.
It's kind of the health of the
Exactly.
stock, the company.
Exactly. So once those are in place, then it comes down to, okay, what does the chart look like? Well, that in this stock, and I forgot your question you asked.
Position sizing.
Oh, position size.
Yeah.
Okay. Position size is how we handle our risk. We don't jump in.
All
with
in,
both
100%,
feet when we're
one
looking to
stock.
buy stock. It doesn't matter what type of market in.
I'm just
we-
kidding, by the way.
We take a position size. So your position size depends on what level of risk you're looking to take. So for example, 5% of your overall portfolio, that might be a large position, it might be a small position, depends on the investor. For me, 10%, that is what I consider a full position in a stock. In this market, I'm lowering that considerably. 3 to 5% is what I'm considering a full position because of the risk, because of the market. Things have been very volatile. It's hard to short, it's hard to go long. So not willing to put some money to risk, but I am staying engaged, put a little money to work because we never know when this market might just take off.
Yeah,
We'll wait and see.
we don't want to be left behind. So it's a tricky balance, right? We've got to have our watch list ready to act if we do start seeing conditions improve. Because Justin, when COVID happened, I mean, there was so much doom and gloom. But for those who were just focused on the headlines alone and not the market reaction, I'll go ahead and pull back up the QQQ on the weekly. I'm sure all you savvy traders out here have this burned in your mind here, what happened in COVID. But for those who were just focusing on the headlines, and that fear alone, could have missed out on the early stages of what ended up being an incredible move. So we've got to be at the ready, right?
Yeah, absolutely. I mean, March 23rd was the low, and then we had what we call a follow-through day, which is one of our signals that we're looking at, that there's a confirmation of price strength. We got that on the S&P 500 April 2nd. We got it on the NASDAQ April 6th. The headlines were horrible, right? So if you were just going by headlines, and thank God I wasn't, because, and look, if you had asked me, do I think this is going to work? I didn't, but I still did some buying because there were things setting up. There were stocks like NVIDIA, Adobe, Microsoft. They were out there forming these cup with handle patterns that we like to see. So again, it was the market kind of giving a different indicator than what the headlines were. And so sometimes it's not about what the headlines are. It's not about the upgrade or the downgrade. It's how is the market reacting to it? Because this is when people are really betting with their money.
Exactly. All right, Chris, let's go to ticker NOC. This is a stock on the move today, gapping up, as you mentioned. It's up about 2.8% right now. It looks like volume behind the move today here is on the heavy side, and some volume has been coming into the stock. So speaking of, earlier you talked about those red volume spikes on the QQQ intraday. I'm seeing some blue volume spikes here lately for NOC.
Yeah, and it's been going sideways. And now gapping out of that range. So if you're, I guess, I hate to say,
if you're aggressive?
Well,
if you're
no.
Willing to make a risky
fearing
bet?
that Putin will follow through, this is a buy. But I'm a little nervous. I wouldn't want to be buying anything ahead of the Fed today. But it is notable that this has been, going sideways, and now it's breaking out and gapping up to a new high.
Right.
In a good market,
Yeah.
this would be something we'd be all over.
Although the defense stocks were a little disappointing.
They were.
We were talking about them,
Yeah,
I mean,
there
again,
was this
after
quick
the
move here in February, and
the
then
Ukrainian, the invasion happened, and it looked like defense was coming on strong for a little bit. It looked like a lot of other European nations were going to be upping their defense budgets. There was a lot of evidence to that, and then they just didn't go anywhere. Now, that could have been the market pressure, but it certainly was kind of, if you'd gone by the headline, you would have said, oh, this is a slam dunk. But if you went by the price, it was for a couple of days, but price action wise, it just didn't really materialize in a lot of these stocks.
which I guess is a good example of why, there's a time and a place to be in a stock, especially if you're going to be an active investor, rather than, getting a great entry, but then just holding and, having that opportunity cost of your money going sideways or lower when it could be working for you elsewhere. That's where some of these price and volume and moving average signals come into play, right?
Well, and you have to think of, again, a lot of it comes back down to the risk reward, right? When you are in a bear market, when you're in a downtrend, that's where stocks don't tend to do as well. 3 out of 4 stocks are going to follow the market trend, right? Okay, so maybe you get lucky and you get that 1 out of 4 that's doing a counter trend. But even if you get that 1 out of 4, a lot of times they are not moving as much up, so your reward is lower. And I mean, yeah, your reward is lower and your risk is higher. That's kind of the opposite of the ratio you want, right?
Yeah, exactly. All right, just checking some notes here behind the scenes. Our team back in LA giving us some tickers to check in on, so we always appreciate that. So, Chris, you mentioned you're not going to be acting on this, especially ahead of the Fed. Well, what about after? Say we do get that best case market scenario here. We start seeing things light up. Would Northrop be worth putting a little money to work in?
For me, probably not, and that's because I'm really focused on growth stocks, and if the growth stocks aren't working, I don't want to really be playing right now. That's especially where we are in the market cycle. I mean, the cyclicals, had made great moves, and now they're getting a little tired. And so what I'm seeing setting up are growth stocks, and that's what I want to see breaking out.
All right. Well, speaking of leadership in growth, those stellar performers, not only with that strong double-digit or triple-digit revenue growth, earnings growth, which we really like to see, but stocks that are outperforming the market and showing that leadership, it seems like those have been hard to come by, Harold, but there are a couple of stocks that people, in the IBD sphere especially, and the broader investing community, I'm sure, have on their radar. Stocks like Enphase, solar stocks have been looking pretty hot. Am I right, everyone? But Enphase, it's down a little today, right around that round number at 300 and the 21-day line. What about something like this? Is this too extended to be thinking about at this point? If we do get that best case Fed scenario, is it too late? Has the train left the station, or is there still a chance here?
No, there's still a chance. Go to the weekly chart with this stock.
Will do.
And look at that tight trading. I mean, it's been trading tight. That's just a sign that the institutions on Wall Street, they're holding their gains. They're not selling it. They're not buying it. They're not adding to it. They're holding their gains because they like what they see with this stock fundamentally and technically. So, yeah, this is the type of stock you do want to have on your radar in the event that the market does kind of take off based on what the Fed says about the interest rate hike we're going to get. We know we're going to get it. It's just what the Fed statement is afterwards.
Exactly. All right.
And how much?
Yeah.
Yeah.
Very true, guys. All right. Well, this stock is about 5% above the 10-week line. I guess another thing to discuss in terms of risk and position sizing is just to dig in a little bit more into where a stock is in relation to those moving averages. What is suitable for you? Within 10% seems like something that we like doing in a strong market. But how about this stock at 5% above the 10-week line? What else should we know?
Yep, 5%. I think me personally, if it gets above 10% or 10% is the max. 7 to 10%. That's where you get a little bit too far above it. In this type of market, you want to lower that. So it is right at that level where it's like, okay, if I don't act now, depending on what's going on with the market, then I'm just going to miss out, which I don't mind. I do not mind missing out on a stock because I don't want to take extra risk.
You don't have FOMO, Harold, ever? You've never had FOMO?
There's always opportunities out there, and I'm going to stay engaged, and I'll find them.
Yeah, wow, that's discipline there. All right, well, I'm doing a little impromptu thing here. I want a ticker from the audience, so it's hard to see a little bit, but the first person to raise their hand, any ticker that you want us to analyze? Don't be afraid. What should we be looking at out there? No one? Yes? Tesla.
All right.
Perfect. All right, let's take a look at Tesla. Justin, I'll toss this one to you. Tesla up 1.5% so far this week. It's been on the move since the touch of that 50-day line there. What do you think about it right here?
You know what? It's kind of been a market performer lately, and so you know, as for a while there, it seemed like as the market went, so did Tesla, or vice versa. So you know, at this point with the market doing what it's doing, I think that Tesla is now starting to outperform again. And look, Tesla was one of my big winners in 2020 and 2019. So I made a lot of money on it, and it was great. But it also was one of those things where I wasn't going to hold through a correction. I was selling. Gosh, it was pre-split, so I have to do the math. But you know, I was selling into the 1,000 area, and now that we've been trending below that 40-week moving average line, it was off my radar for a little bit. I mean, I was watching it still because everyone asks about it. But now that it's back above its 40-week line, its 10-week line, and it's doing it before the market has, that makes the relative strength start looking a little bit more interesting. And that relative strength line, we have this on the charts, it's a simple line. It's just a ratio of how this stock is performing versus the S&P 500. When it's up, it's outperforming the S&P 500, and you can see that right now, Tesla, the relative strength line is up. And so that's what we want to see from our leadership. So historically, only about 12.5% of stocks that led in former cycles come back to lead in another cycle.
So you're telling me there's a chance?
There's a chance, exactly. And Tesla is one of those that has led in multiple cycles. I mean, this was a big leader back a decade ago, and then it came back and led again. So yeah, there's certainly a lot of, you either love Tesla or you hate Tesla, but
let's see a show of hands. Why not? Who's a Tesla stock fan out there? Yeah, there we go. You got the question out there. Who's not sure about Tesla? Maybe it's the company, Elon Musk, the stock.
Well, especially now the competition is coming out. A lot of competition from China, right? They're not alone. They were dominant, and they still have that first to market kind of advantage. But you know, there's some companies out there that are playing catch up. Again, this is where we're going to watch the chart action and see if it can continue to hold up this strength and now get a market behind it. Then it's a different story.
It is. Okay, Chris, let's have you take a look at ticker PI. This is Impinj, semiconductor stock coming down to its 10-week line. A little bit of a theme here. Stocks that have had strong moves up, coming down to the 10-week line. Semi stocks, there's a couple of them that are leaders. This looks like one of them.
Yes, and it had a really nice move off the bottom, and then it's pulled back, but trading fairly tightly. The volume has been pretty good, and it's moving a little bit today, but look at today's volume. It's running 49% below average, and that's something that we've seen a lot lately. Sometimes stocks will be looking like they're ready to break out or reverse, and there's just no volume behind it, and so that gives us pause. So today, the price action looks good, but the volume a little light.
And again, because we have to be prepared for later today, I mean, best case scenario, we got to be glass half full people, right? So we got to be ready for a potential opportunity here later today, Chris. Or I guess the other scenario is all of these stocks that we're talking about for our watch list, maybe they do start breaking down below the 10-week line. That seems like that would be a pretty negative sign for the market, right?
Yes. We don't
Why
want to
is
see
that?
it. Well, because healthy stock rides the rising 10-week line higher, and then when you break through it, the 10-week line and close below it for the week, that is usually a very clear sell signal.
Exactly.
Well, you know what? I want to make sure that we're not too doom and gloom here.
Yeah. Well, hey, I'm trying to bring the sunshine.
Right. You're trying to get that that
buying
half,
opportunities,
the glass half full. And I want to be very clear that for a lot of us, the optimism really comes from, hey, in a correction, this is when the opportunities get made. So we actually look forward to corrections.
The oyster and the pearl.
The sand and yeah, exactly. This is when the magic happens, because this is when the bases form.
Right.
This is the prep. So if you can be kind of keeping your powder dry, and that's what a lot of us are doing, right? We don't have as much exposure right now, but we're still building our watch lists, and by doing that, when the market does turn, because I think we all believe that it will turn eventually, it's just a matter of when. But when it does, if you can be ready with your watch list names, that's when the great opportunities come, especially what's going to happen, because this happens just over and over, and sure, past performance is not indicative of future results, but what's happened historically is you get these phenomenal moves and they start early, and the thing is you don't have to be there right at the bottom. You have a little bit of time. These will develop, and so for us, it's important that we don't necessarily look at one day of strength and say, okay, I got to jump on it, and that FOMO that you mentioned, fear of missing out, it's more about, okay, let me see how these things are developing, build my positions, and then, you know, the market kind of gives you the feedback. Once the market gives you the feedback saying, hey, you know what, things are working, things are moving up higher, then you can put more money to work, and it feeds up on itself, and then before long, you're like fully invested and making money again.
Yeah, and that's when IBD Live is really fun, when we're like, we can't decide what stocks to talk about next because they're all
it's the fire hose, right?
And it does seem like even though there is time, there is a little bit of lead up, because if you are paying attention every day, you're going to be able to find that spot to get in. But at the same time, I don't know, I feel like it's a little tricky because it does seem like for some of the leaders, there is then sort of a narrow window, Harold, right? To get in without chasing, and then you have that FOMO. So, you know, paying attention now to these stocks setting up is, you know, really what we want to be doing. We want to keep that optimism, right?
Absolutely, because you have to stay engaged. If you wait for, there's no announcement that we're in a new uptrend. Okay? So you have to stay engaged, and as Justin just mentioned a moment ago,
and it might not be obvious, right?
So that's what you're saying. The market's going to tell you when it's time
to the crowd.
The individual stocks will tell you when it's time to get in. That's why we pay attention to the charts, because and not the news. The news, think of news. That's past tense. The chart is now. So we pay attention to what's going on with the chart, both in the market and individual stocks.
And even forward-looking, right? A lot of times it's not just the now, but they're projecting to what those earnings, you know, are going to be, what the implications are. That's why you see after an earnings move, you know, a gap up or something, it's like, oh, we have to revalue this company because with this new information, the implications for the future are very different.
Exactly. Now, before we get too far away from Tesla, I do just briefly want to bring that up because, Chris, this is one of the stocks that you and Harold and myself, we are going to be analyzing later today. We have a session that's talking about some of the best market winners throughout history and all of those signs that we should be looking at so we can catch the next big winners, right?
Absolutely.
Jinx. And I was right there with you in my mind. So yeah, that's going to be a really fun conversation later today. Looking forward to that with you all. And it's a great 2-day lineup. IBD has a lot of great sessions, and we really hope to see you at some of those other ones. So since we talked about chip stocks, Justin, let's go to Wolfspeed here. This is in the semi-manufacturing group. I'm seeing a lot of up weeks in a row here. Only one down week in the last however many weeks off the bottom. But let's take a closer look at the daily chart here. I have a trend line that the team drew a couple of days ago, and it looks like it's above that level. So this is another promising watch list name at the very least. What do you think about it?
Yeah, so a few things. You know, so here again, we got a situation where this company had its earnings report, and you can kind of see that it was revalued, right? It was a lot of people saying, oh, this has more potential. And then it held its gains. So that's something we really like to see. And, you know, we keep on talking about a lot of these stocks that have pulled back to their moving average lines, but, you know, in a lot of these cases, what's actually happened is that the moving average line has risen up to the price. So that's even better. When something is holding gains, holding tightly, that's kind of letting you know, hey, it did get that extra valuation, right, that extra kind of charge, and a lot of the investors, especially the institutional investors, are comfortable with it at that higher price. So when you kind of see something hold tight like that, that's a good sign. So again, we do need that better market environment before we're going to stick our necks out. But this is one that does have a little bit of a better volume signature in my eyes. You've got a little bit more of the blue volume spikes coming as opposed to the red volume spikes that we're seeing in a lot of other stocks. Again, this is relative strength-wise. You look at that relative strength line, and when you see something at an angle like that, when it's at the
Yeah,
1 o'clock angle, that's something that you have to pay attention to. And again, when we look in the past, historically, of some of these biggest winners, they're forming during the corrections, and this is what their relative strength lines look like. So on the fundamental side, this one is a little bit more speculative. Look, they're getting their silicon carbide stuff up and running.
Not profitable yet.
Not profitable yet. They do have some decent revenue. But let's go ahead and also look at onsemi, because onsemi is in the same kind of area where it's, I almost liken it to the biotechs, right? This one is, maybe not got the drug out there that's making money yet. Whereas onsemi kind of has a little bit more of that, that broader pipeline, a lot of other products out there, but they are definitely getting into that same business of, okay, how can we get that power from the electric vehicle motor to the wheels more efficiently? And a lot more efficiently than an internal combustion engine. So onsemi is another one where it just looks very different from a lot of the other semiconductor stocks. And look, we were very hot on NVIDIA, right? That was that was the semi stock, but it was, and that's not to say NVIDIA can't come back. Right. I thought that it was dead. If you go to the weekly chart on NVIDIA, I thought it was dead a while ago, but it did come back. It was one of those 12.5% that was able to lead in another cycle. But right now, with it being 70% off its high, 60% off its high, no thank you right now. I'm looking at those relative strength leaders, and that's where Wolfspeed and onsemi are, not NVIDIA.
Yeah. All right, well, Harold, let's have you take a look at ticker DY. This is DICOM. So moving on to telecom and infrastructure, we're seeing a bounce off of the 50-day line. The stock is up about 2.4% right now. It doesn't quite look like volume is there right now, but would love your analysis of the weekly chart here. It looks like that round number at 100 was a resistance level going quite a ways back to the beginning of 2021. It recently got above that level. So will that resistance now turn into support? At least right now it looks like it is.
So far, it looks like, resistance has turned into support. You have that pullback to the 10-week moving average. That's the red line on the chart. Volume a little bit higher than we normally like to see. When we see a pullback to that 10-week, we do like to see that volume kind of subside. So it's a little bit on the high side, but price is king.
Yeah.
So price is held up above the 10-week moving average. So far, so good. This is something you want to keep on your radar. I was looking to see if it pays a dividend. Usually telecom stocks, but this one does not.
Doesn't look like it.
But it's still showing that relative strength. You have that blue line on the chart showing that, okay, in fact, this stock is showing some relative strength. So even though it had that sideways movement for several months back to, at least last couple of months, that relative strength line has been rising. So something you want to keep an eye on something you want to have on your radar.
All right, Harold. Well, telecom, infrastructure, is that kind of a snooze fest here? Where's the excitement? Where's the excitement with this one?
There isn't in telecom. That's why
I guess my question is, sometimes good stock ideas could come from unlikely places. They're not always going to be the NVIDIAs and the Squares of the world.
Right.
So what do you think about that? Should we put this on our watch list, even though?
I would think, it's something you do want on your radar because it's showing the price strength. Yeah, it's not something exciting that you're going to find in the news all over the place, but who cares about that? It's all about making money. It's about making your portfolio grow, seeing that equity line go up. That's what I'm interested in, not necessarily the excitement around the stock.
All right. Well, we have a couple of other tickers from our virtual audience that we want to check in on. Chris, let's have you take a look at Shockwave Medical. This is a systems equipment name in the medical sector here. What's your assessment of this weekly chart?
It's looking very good. This had a big move and holding tight. Again, this is one of these growth stocks that we're really keeping an eye on because once the market turns, this could be the type that goes up 100, 200% or more. So these are the stocks that we're really watching right now. And it's, it hasn't pulled back into its 10-week moving average. It's getting close, trading, very tightly, maybe trying a little bit to cross above a downtrend line there on the daily chart, but I'm not seeing a lot of volume today.
Yeah, it does look like it's testing a potential trend line there. Chris, something that we haven't really touched on yet is how to handle existing positions headed into the Fed announcement today. Say someone did get into Shockwave here when it got back above that 200-day line in late June, or maybe they were a little later, they got in on this earnings move here. How should they be handling existing positions with that Fed uncertainty that's coming later today?
Well, right now it's, how much above the 10-week is it?
Let's take a look. I'm going to go on over.
10 or 12%. So
it's about 9% above the 10-week, maybe a little bit more above the 50-day.
So if you've got more than a 10% gain on the stock, you can hold it, because if everything is normal, and let's say the market is bad, it comes down to the 50-day or the 10-week, you're doing okay. You're not turning negative on it. If you bought it recently, maybe off the 21-day or something like that, and you're just even, maybe not.
Get ready to
get
part
ready,
ways,
or if you've got a larger position, maybe you're really aggressive and you bought a 10% position, maybe take a third off or something like that.
A third? Why a third?
It just works nicely because you can, let's say you get nervous and you take off a third and the stock turns higher. You at least still have the bulk of your position and you can buy it back. If it continues to get weaker, you take off another third. Now you're only got a third of the original position. You're much more on defense, and you can wait, let's say, till the end of the week or the end of the day to make your final decision on whether to cut the stock. So I really like the idea of moving in thirds.
Yeah, and not making that all or nothing decision, especially on a day like today where those intraday charts might have us start sweating a little bit, making us a little nervous. We'll have to see if we do see selling, if it gets worse, if we see a reversal. I mean, it does seem like on these Fed days, Justin, just to reiterate what we're talking about at the beginning of the show, it can be a bit of a roller coaster ride. So that first initial reaction may not be the ultimate reaction that sticks. So that makes days like today's especially tricky for investors.
Well, and I guess this is where, again, it comes down to risk management. So ideally, you're at a position of exposure where you're not sweating too much, right? If you're sweating too much, then that means you're probably overexposed.
Need more deodorant?
Right, exactly. So, and again, it's, a lot of times people talk about, selling to the point where you can sleep well at night and things like that. So, it should be one of those things where, especially when there's a binary event like this, where, okay, it could go one of two ways, right? I mean, maybe it goes sideways, but there's usually a reaction one way or the other, and it can usually be fairly quick. So if you don't have much cushion on things, this is kind of like how we handle things going into earnings. If you don't have that much cushion, okay, well, maybe we'll step aside and buy it after the earnings if it still looks okay. And that's just one of the strategies that a lot of us use to kind of allow us to not be sweating so much. I mean, for us, we're going to be busy today, right? It's going to be hard to be looking at our charts and saying, okay, what am I going to do? What am I going to do? So you kind of almost have to go into it with, okay, I'm willing to give things a little bit of room here because I recognize that there's going to be some volatility.
Absolutely. All right, Harold, let's have you take a look at Costco. This is another one from our audience wanting our take on. I mean, if you think about inflation, and this seems like a good play for that, but what is the chart telling us ahead of earnings here this week?
Well, the chart does not look good. Costco a couple of weeks ago was looking very strong.
Yeah.
But
what happened, Harold?
I don't know. As I guess I haven't been shopping there because I do spend a lot of money at Costco, but looking at the chart, I mean, it's violating all the major moving averages. Okay, so that's a sign that there is no strength in this stock at the moment. Maybe long term, Costco will come back, but right now, as we speak, I don't see anything, especially when earnings is tomorrow. I don't know whether they report after the bell or before the bell, but earnings we'll have to wait and see. Regardless of what market we're in, earnings is something you have to, if you don't have a position in the stock, hold off, wait to see what happens. And then if you do have a position, you know, you need to look, okay, well, how much profit do you have? Or maybe you had a loss. You know, it's best just to get out of the stock if you have a small profit or maybe a small loss, because earnings, it's a crapshoot. There's no telling what's going to happen. You have no idea what's going to happen. And earnings, like I said, you just want to be out of it.
Yeah, but it's Costco, Harold, so if I'm down a little bit, what if they have a great earnings report and then I'd be back up on my position?
Well, you know, now when I said get out of it, doesn't necessarily mean sell everything.
I'm playing devil's advocate here, of course.
Of course, yeah. Well, a lot of people, well, that's good, but when I say get out of it, doesn't necessarily mean sell the entire position. You might sell a portion of that. And like Chris said, I like to do thirds. Take a third off, okay, see what happens. If it does have a great earnings report, okay, you've got some money working for you. If it doesn't, okay, you've taken some money off the table, maybe locked in a small profit, or you had a small loss, but you can get out of it in the event that it just doesn't work out because of the earnings.
Exactly. And Justin, you know, it comes down to how much are you willing to risk. This is something that we talk about when it comes to earnings, looking at what the options market is pricing in, that expected move. That can also help you with that calculation.
Absolutely. You can just take a look at the near-term options expiration. You can take a look at the at-the-money strike price for both the call and the put. You add those together. That gives you a sense of the point move that is expected. You know, you can put that in percentage terms if you'd like, but it gives you a sense. Okay, this is what the options market is saying. This is what the implied volatility is kind of telling you. So if you have plenty of cushion, then you're like, oh, I can weather a storm. Because remember, the options market is only going to tell you the expected move, but it won't tell you the direction. That could be up or down. So again, this is a binary event. But one other thing I'm going to add on Costco. So the earnings are tomorrow after the close. But if you just go back a few weeks, this is what we're seeing a lot in the market.
Breakout, fake out, as I like to call it.
Exactly. You get the breakout, and then it almost immediately fails. And we keep on seeing this over and over. So this is, it's not an indicator that you can very easily say, oh, how many breakouts are failing? You kind of get a sense of it as you're looking. And you're looking and saying, okay, here's a breakout, but they're not working. Now, eventually that's going to change. And when that does, you're going to start saying, oh, I'm making money, I'm making progress. Now I can put more money to work. But because we're seeing so many of these breakout failures, it's telling us, hey, don't get too excited here.
Exactly. I mean, some pockets of strength, a couple of tickers that we've highlighted. Also, Chris, you know what we haven't looked at yet today? Energy stocks. I know you have some mixed feelings at best about energy stocks. You look at XLE, which tracks the sector, up about 0.4% today. And a lot of stocks in this sector, the action mirrors what we're seeing here with XLE. We're seeing a lot of cup with handles, but we saw some early entry, maybe not a breakout fake out, but an early entry fake out for a lot of these stocks.
Let's first look at USO.
USO, that is going to be the proxy here for the price of oil. I'm seeing it's down over the last couple of months, Chris.
Yes, so it's actually, and the futures, the oil futures look even worse, more pronounced in this, where they're under their 200-day moving average, and the 200 days now sloping lower. So the underlying commodity does not look good. Let's take a look at UNG, and that's natural gas.
Yeah, we were seeing a little bit of a divergence there, but lately some really wild action for natural gas.
Two gaps down in the last 5 days, and just going sideways now. So with that backdrop, let's take a look at some stocks.
With that in mind here, you know, one that comes to mind that I know is in the news a lot and on a lot of investors' minds is Occidental Petroleum, because you got that Warren Buffett buzz. So let's take a look at Oxy here, which a number of weeks ago did have a big move tied to some Warren Buffett buzz there. But what about it here? How's it looking? Is it still looking okay?
No, you know, it looks like it went up more than 10% from that breakout and gave it all back. So that's a sell signal for us. Anytime you're up more than 10% on a stock and it reverses on you, that's not the way good stocks act. They should hold those gains and then move higher. So,
which is why this year, especially, I know, Chris, you've really been wearing your swing trader hat.
Yes.
And focusing on the short-term moves, whereas maybe in a stronger market, if you're a position trader, trying to hold stocks until they violate that 10-week line, but not if they're going to have round trips like that. So it seems like a situation where guilty until proven innocent.
Right, and so it's getting support at the 50-day. It looks good right now, and let's say it really popped above, the 21-day or the high from a week or so ago, and there was some volume behind it. That could be a good swing trade, and maybe it starts working, and you could let it go. But in the most recent move, treating it as a swing trade would have been the way to go.
So, I mean, this is a huge sector, and we have seen a lot of successful moves, especially the first 6 months of the year in this group. But with all of the setups that are out there now, how do you determine which one to go with? If we are keeping our exposure light, is it something like Oxy that does have a lot of attention on it? Or what would be some of the other determining factors that you might look at? Maybe you're screening for something on the fundamental or technical side. What would be that go-to stock in the sector for your watch list?
Right now, nothing looks super compelling. We'll look every day, and we've put some, we've traded energy stocks on Swing Trader successfully, and sometimes not successfully this year.
Which is a big indicator of just
exactly.
the kind of year the market's having.
Right. So we're looking for the next setup, and that just means going through the stocks that have enough volume for us and looking what's acting well, tightening up, and then we'll have it on our watch list, set some alerts, and if it breaks above it and there's volume behind it, even though maybe the underlying commodity isn't that great, if we're seeing a lot of strength coming into commodities, especially oil, we will, we'll give it a go. We did it recently and it didn't work. So.
Yeah. Well, let's take a look at some other names in the sector. FANG, Justin, Diamondback Energy. This is in the U.S. Explorers and Producers Group. It's working on an update today, and it's in one of these cup with handles that's mirroring that broader sector. How's it looking? Is it showing that relative strength or not so much right now?
Well, I think it is, again, when you compare it to a lot of other things in the market, the fact that it's just above its 50-day moving average line and 200-day moving average line when so many things aren't, that is relative strength. So I think that is worth, worth noting. Some of these also have some healthy dividends. This is a 5.5% yield. So for some investors, that's attractive right now. They're like, at least I'm getting my, at least I'm getting my dividend. I'm getting something. Yeah. But I always caution people that, okay, don't get so excited about the dividend, because if you're losing money on the stock, net, you're down. You lost money, and don't look at the dividend and say, well, at least I got that, because you could be down on your position, and lose more than the dividend.
Yeah, Harold?
And at what point do you say, okay, the stock is down, do I get out? Yeah, I'm getting a dividend. And at what point do you say, I've had enough?
Yeah.
So
yeah, I know
that dividend alone is not enough.
Exactly. Although some of the dividends, like the shipping stocks and some of those really juicy dividends.
We were just talking about PBR, where the Petrobras, the dividend on that, and I did own that. It was it was nice to see that coming in. Actually, I think I'm still waiting for some of the dividend to come in. Right?
Yeah.
But sure, it's fine. But again, you have to look at it in comparison to what is happening with the price too. Don't ignore that and just look at, oh, I got the dividend, and so everything's fine.
Absolutely. Well, Harold, what do you think about this stock on the weekly chart? We are seeing a bounce off of the 10-week line, but this is another one of those stocks. Not only did it round trip a 10% gain, this one round tripped a 20% gain. So what do you think about that?
That's not good, because that's not a sign of leadership. Your leading stocks, they don't give back that much. Now, it's come back, it's found some support at the 10-week, but me personally, I wouldn't be looking at, I don't like the fact that it's given back and went up 20%. You'd like to see it hold it like InPhase did.
Yeah.
That's what you want to see in stock that's showing leadership. this PBR has not shown that type of action. So I wouldn't be looking to get in it regardless. I mean, PBR, that's a huge dividend, but the price is not acting well. And if you go back to FANG, you know, as far as a leadership, you know, we talk about stocks looking for leadership. Look at the fundamentals. I mean, you've got some strong sales, strong earnings. Those are the type of things you want to look for in preparation for this next uptrend. Justin mentioned it earlier. We are going to have a new uptrend. We don't know when, but stocks like this with the strong earnings, strong sales, the chart pattern looks great. These are the type of things you want to have on your watch list.
Now, I'll say one thing that's been tricky about these, and FANG is a good example of it. If you kind of zero in on that really rough week that we had.
I knew where you were going, Justin.
Yes, exactly.
Yeah,
you know,
that was that mid-June.
June 17th. I mean,
time was
you know,
tough.
again, this was one of those things where oil and gas had been, you know, your leaders of the year. I mean, they were doing something completely different from the rest of the market, and it just felt like the rug got pulled out from under you, which is, again, something that happens in a market where there's a lot of sector rotation. We've been seeing a little bit more of that, a little bit more trendless, and when you see something, a bad break like that, you want to see a recovery. And I think, to FANG's credit, what I do like about what it's doing right now is that it is getting that tight action. You know, so that makes me feel a little bit better.
Right.
But that was bad. It's got to have some positive action to counterbalance that.
Exactly. All right, well, let's kick things up a notch, shall we? Let's pick up the pace and get to more tickers. This is in preparation for our lightning mode. This is the pre-lightning. Rolling thunder, maybe coming in, storm clouds gathering.
Instrumental.
Exactly. All right, Harold, let's have you take a look at FREY battery, ticker FREY, in the alt energy group. It's had a number of up weeks here, only 2 down weeks, breaking the strong move off lows. It's now no longer less than $10 stock. We now have the double-digit price here. Let's go on over to the daily chart. Wow, this is really popping today. It's up almost 13%. What do you think about that?
Yeah, very large move, but I do see a lot of volatility in this stock. When I say volatility, I'm talking about, you look at the price bars, the high to low, very wide price swings. So that would be, to me, that would be a turnoff. In addition to that, I'm not real familiar with the stock, so this is not something that I'd be interested in. But
it's
looking
like
at what's happening
EV
today,
battery play.
Yeah.
So, you know, EVs, that's one of the hot themes that's going to be talked about at the show this week.
Right. So even though it has probably a product that's in demand, price-wise, this stock has already made a terrific move. So you keep an eye on it. You want to wait for a pullback. But as far as something that's actionable now, I don't see anything. It's just too far extended.
Yeah.
It's made its move.
Well, why wait for a pullback? If we want to be buying the stocks showing strength, well, this is showing strength. So why not get into something like this here? It goes back to that risk equation.
It goes back to risk. And if you are going to take a position, and just stay small. Remember, we talked about position size a little bit earlier. You know, maybe take a small position.
So what is small?
Small, and it depends on, you know, it's small.
What would small be for you?
Small would be 3 to 5%
of your portfolio,
of my overall portfolio. So I'd probably go on the low end with this one, maybe a 3% position. Let's just see how it works. If it pulls back, for whatever reason, then okay, I may have lost, but you know, I didn't have majority of my portfolio at risk.
Yeah, and you talked about it being extended, extended from not only those shorter-term moving averages, but especially those longer-term moving averages. So what does history show us about, so stocks can have a variety of different personalities, but in general, what does history show us about how stocks act in relation to those moving averages? That can give us an edge.
Right, so history has shown us when stocks get above the 50-day moving average, around 40%, that's when they tend to run out of gas, pull back a little bit. So this stock, just visually looking at it, it looks like it's well above that 50-day moving average. That alone would be, okay, that stock is up in that nosebleed area where you say, okay, this is subject to a pullback. So I wouldn't be looking to put some money into it. I would want to wait for a pullback. If I don't get it, okay, I don't have FOMO. I'll be looking for something else because there are other opportunities out there.
Great. All
But
right.
you can keep it on your radar,
Yes.
right?
Absolutely,
And
yes. We will.
do some research. It's got looks like a Barron's.com article on it, so you can find out a little bit more about this Norwegian battery startup.
Yes, and we do have an interview on our colleague Alexis Garcia's YouTube channel with the CEO, so definitely recommend checking
Oh,
that out
excellent.
for some additional research. All right, Chris, let's have you take a look at First Solar. I did say that was Rolling Thunder, but now we are
Yeah, yeah, yeah.
Now you mean it.
Guilty
Okay.
as charged.
It was a
but-
slow roll.
Yeah.
But now let's take a look at First Solar. I mean, this kind of stock shows why this solar industry group is ranked #1 out of the nearly 200 industry groups we track. I mean, this is a lot of outperformance we're seeing here.
Yeah, but it's also extended. It's about 17, 18% above the 10-week moving average. It's going sideways tightly, which is great action. So one that I'm watching and waiting, and I would love to see it pull back to the 10-week, maybe make a flat base here. And again, if the market starts giving us more confidence, that this would definitely be one that I would want to trade.
What about, and I know this is getting into the weeds here with a little bit of jargon for chart patterns, but what about some sort of high tight flag-like action? Is that something we should be keeping an eye out here? Does it fit the parameters for that? That's a very bullish pattern. And just imagine a flag, right? You've got the flagpole. Is it working on the actual flag part? I mean, you talked about how tight it's gotten. So what do you think?
I mean, from the bottom, it's up more than 100%, but it doesn't really have that look. Usually when it's coming out of a real base, I mean, this thing was below the 40-week moving average and then started shooting higher. So, when I look at high tight flags, I like to see them in bull markets.
Step one.
Right.
Great.
Coming out of a base, a breakout, and then it runs up, let's say 100% over a couple weeks, and then holds very tight, goes sideways, then that's when you can, make a jump on
We'll
it.
have to see.
But those successful high tight flags usually are the result of a rip-roaring bull market.
Well, Justin, we always say we're only 4 days away from a bull market. What if we do start seeing the market kick into high gear here?
Well, and that could happen, right? The Fed meeting could be a catalyst that starts things rolling. So we have to be prepared for that. So what are we going to look at? Well, we're probably going to look at the things that are setting up, not the things that are already out of there. Now, it doesn't mean we don't want to let them drop off our radar. We want to be keeping them on our radar because a lot of times they give you another opportunity. They'll base out and give you another shot.
Exactly.
We could have a 3 weeks tight pattern by the end of the week. So that's another bullish sign for the stock.
Yeah, that tight trading action with tight closes from week to week.
Look at that RS line. Look at that.
Yeah, that's
That kind of sticks
pretty
out, right?
skyward.
Yeah.
Reaching the sun.
Yeah, that's not the 1 o'clock position. That's almost the 12:15.
Yeah, exactly. All right, so I'm looking through the Q&A here. Harold, let's have you take a look at Square. This is from one of our virtual attendees. What do you think about this stock? It's taken a lot of pain over the last year here.
Yeah, Square is not showing the leadership that it once did. Unfortunately, this is not a stock that I wouldn't have it on my radar. Just looking at the price action. I mean, it's what, 77% off its 52-week high. There are other ideas out there. So Square, one of those stocks that can be somewhat exciting, but you look at the price, look at the fundamentals, not something I'm really interested in.
Thank you for that lightning mode answer, Harold. We appreciate it.
I was going to add to it, but that would have ruined it. So
Next time. Well, actually, you know what? Square is going to be one of the stocks that Harold and Chris and I are going to cover this afternoon. So stay tuned for more analysis of what got this on our radar in one of its past moves. 2017. That was a huge move for Square.
Absolutely.
So we'll analyze that in more detail. All right, let's take a look at Salesforce.com CRM. Chris, this looks a lot like a Square. It looks like I didn't even really change the ticker here.
Right. For me, anything that's below a declining 200-day, I'm not really interested in. I want to see it set up and get above that 200-day. I mean, we'll buy bases around the 200-day, that, you know, at least part of the
Yeah.
base is above it. We did that with NVIDIA years ago to great success. But, you know, at this point,
It's a damage chart.
Right.
Damage stock. Well, you know what? One of those examples, I'll give you another one here, is double verify. You know, we don't want to bottom fish, but it is good to keep stocks that have been moving off of their lows on our radar and showing recent relative strength. Double verify, DV, one of them. So that 40-week line or the 200-day line is declining, but it is above that level.
yeah, and it's flattening out. And this is one that came back above the line, then traded very tightly. And then when it bounced off that line, a number of us took positions. We added it to leaderboard. I cut my position in half when it was selling off last week. And, you know, it's actually had a nice reversal on Monday. So it's acting better right now. But, you know, I'm just waiting for it to set up. And hopefully I can hold on to the small position I have now and build up as the market gets better, the stock starts reacting. And this is the type of things that we're, you know, looking forward. It's a new name. It had come
we want
public.
newness, new leadership.
It had come
It's always
public,
good.
you know, what, about a year ago or so, maybe more than that. The estimates are excellent, and it's unique. It helps advertisers place their ads on social media that won't make them look bad, is really what it comes down to.
All right. Well, Chris, in terms of a potential new buy point here, is this setting up another trend line that we should be keeping an eye
Yeah.
on?
Yeah, you could draw a trend line there, and especially if it can go sideways and the 50-day then catches up to it, that could be a really good point if it starts showing some strength.
All right, we like to see it. Okay, audience out there virtually and in studio, we would love for you to submit your tickers for our lightning mode. So I'm going to pull up our different Q&A platforms from the virtual audience to see what tickers they would like us to talk about. So let's go now, Justin, to ELF. This is from our friend Phil Fratt. It's looking strong today.
Yeah, extended right now. You can see that it's hit that 20% profit level from the last breakout. But you've got to pay attention to something that's looking this strong when the market is been in a downtrend. So that relative strength line going through the roof. So keep it on your radar. Look for another opportunity.
All right, and next, Harold, let's have you take a look at Twilio. This is an anonymous submission here. It's been bumping up its head against that declining 10-week line. You know, we talk about that as a short opportunity, but earlier in the decline, right? It seems like it might be a little too late to be shorting something like this.
Yeah. I mean, after you get about the second or third bump up on the 10-week or any moving average, that's usually when it's typically too late. The stock doesn't look much different than Square.
Yeah, it does look very similar.
Or what was the other one we were looking at?
CRM,
CRM.
Salesforce, yeah,
So,
yeah.
same situation. I don't see anything as far as an entry. You might get a little, it's hitting resistance at the 10-week. You might get a pullback down to maybe the 60 level, but you know, you got to be real sharp on your technical analysis to get into this.
Yeah, quick in, quick out on the short side. But Harold, I mean, Twilio it's so cheap now. It was over $400. Now it's at $75. Isn't that such a great deal? Why would I not want to go long this stock? You know, if it's too late to short, then doesn't that mean traders should be buying?
Not
What do you think about
necessarily,
that?
because we know that stocks that were leaders in a previous cycle, many of them do not come back. So who knows if Twilio might come back, it might not. If it's something that you really want to get into, just keep it on your radar. But for right now, as we speak, there is not really an entry in this stock.
Got it.
And how long could it take for it to come back?
Exactly,
if it
right,
does?
Justin? Microsoft, that's an example that we often point
15
to.
years
I'm
it
gonna
took for
have
that
to
to get-
zoom out on this monthly chart. So yeah, who knows where we are in the move for Twilio. If it does make a comeback, maybe this is a scenario that it plays out. Microsoft went sideways, like you mentioned, 15 years before it really reasserted itself.
And you guys are going to talk about Cisco later on today.
Yeah, we are.
So I mean, Cisco hasn't gotten back to its old highs, and it
Yeah.
was absolutely the market darling at one point.
Yes, there's look at CSCO there. All right, moving on in our lightning mode. Chris, so we are getting questions from the audience circling back on the Fed decision here. What should we be thinking about with the 10-year yield? It's really been spiking. I'm on a monthly chart here, so up 13% this month. It's just been climbing, and now above that 3.5% mark, which was a previous level where we did come off from, and now we're just a blasting higher. What do you think maybe a little bit more color on the expected reaction later today? I know we all wish we had a crystal ball right now. Unfortunately, we don't. But what do you think?
Well, based on what Powell said in Jackson Hole, that he called on the 1970s, and so he's concerned about inflation becoming stuck in a wage price or price wage spiral. I would say right now it's a price wage spiral. The prices are driving that up. But his point there was this is going to take some time, and
use the word pain.
Yes, right.
I mean,
and investors really keyed on that word, right?
Yeah, it's not very positive.
Right, and so last week's CPI number was, especially the core rate, was up substantially. So I don't think he's ready to say, okay, we killed it, let's
Problem
move
solved.
on. Yeah.
Right.
So I doubt that. I doubt that there's going to be a message that comes out that's going to tell Wall Street, all right, we're all back in, let's go.
All's well,
yeah.
all is safe.
I mean, maybe he'll say something that indicates that, okay, they're going to take it easy for one or 2 months to see what happens.
Take the foot off the gas,
right,
maybe?
or the brake.
Or yeah,
right,
there you go.
But it just seems to me that we need to get rates higher before we can really slow down the economy. So.
Some great insights there, and I do have the Dow Jones Industrial Average pulled up in that 1970s time period, and this was a sideways market. So for those of you just now joining us, welcome to IBD Live. We're getting ready to wrap up our analysis here, but Justin, if we do see a market like what we saw in the 70s, what does that require from active investors? If it's a sideways market, we can't just sit on our hands for decades, can we?
Well, it does require some patience, because there may be not as many opportunities, but a lot of times, even if you take that step back and you're looking at a monthly chart and you're saying, oh wow, this is a lot of sideways action, you still do have these rallies in there. I mean, if you look, from 2000, how long did it take for the NASDAQ to get back to its old highs? And if you looked at that as an entire sideways area, well, there was a nice move in 2003 to 2007 before the financial crisis. So there are these opportunities, and you have to be, aware of them. And look, Bill O'Neill, the founder of Investors Business Daily, he had some great winners in the 70s. Pick and Save, he held that for 7.5 years. That's the longest stock he held on to. Very unusual for him. But there were those gems out there. McDonald's was in there, absolutely.
Prime time for Mickey D's.
Yeah, so
Walmart started in
Walmart.
The 70s.
So maybe we'll see some of one day we'll think back. These
right.
The 2020s.
and look, even the
stocks.
20s, and 30s. I mean, a lot of very innovative companies came out during that time. So again, you have to be open to it. You can't get to a point where you're so negative and you're like, oh my gosh, this has been dragging on for so long, that you kind of throw in the towel and give up.
So Harold, do you think then that at least in the short term, until we do get maybe a little bit more clarity from the Fed, that seems like it's more of a stock pickers market right now? That's the way to go. Be nimble, be active.
Definitely. If you go back to the Dow and show the 70s, I mean, we could have a market like that. It's going to be tradable rallies. Where we got a lot of up and down. Yeah, there's going to be some tradable rallies within that up and down sideways movement that we saw throughout the 70s. So
Yeah.
we could see that repeating again.
We'll have to, yeah.
We'll have to wait and see. But be prepared. I think it's going to be a stock
Yeah.
picker's market.
Exactly. I mean, we're not saying that this is how things are going to play out, right, Chris? But we look at other market cycles IBD has and studied them, and that is what can help us get an edge. What are some of those similarities in when a new bull market starts, and that gives us an edge?
Yeah, absolutely. We have a model book of the best stocks of the 1970s. It's a thick book. There were a lot of big
to learn
winners.
from that period, right?
And actually, the principles that worked before it and work now, those were the things that were going on, where stocks were showing relative strength when the market was in a downtrend, and then when the market turned up, they made explosive moves over many months.
Yeah. But as a reminder, during that time, because I mean, some of us were just born, some of us weren't born, some of us were very young. The market bottomed in 74, 75. But it was a while before it really took off. I mean, it was 1982, and that was the start of, okay, now we're cooking with gas. But the other thing too is, I mean, that's a long period of time. Hopefully we've learned some lessons, and hopefully this Fed has some other tools that they can use to kind of not replay that historical.
All right, thanks, team. So just a quick roadmap for the last 9 minutes or so of the show. We will get into a rapid-fire lightning mode. We'd love some ticker suggestions from our audience if you have anything that you would like for us to analyze. And then we're going to get the final market team thoughts and how you're positioned ahead of the big Fed announcement. And then we will be on our merry way. How does that sound? All right, guys?
Let's do it. Sounds good.
All right, let's do it. So first, with our audience, anyone out there with a stock they'd like? Yes, you in the orange, stand up and introduce yourself briefly.
I'm Susan. I work at Dagger Engineering from North Dakota. Alcoa AA is a ticker.
Okay,
Alcoa.
great. Thank you so much. We'll take a look at ticker AA. All right. Harold, this one goes to you, and I'm going to go on to a current chart here and over on the daily. So mining stocks had a big move at the beginning of the year. What do you think about it here?
Well, Alcoa is showing some weakness. You can see that it's down below the 50-day moving average. That's the red line on the chart. So that 50-day and that 50 area, that's going to be a level of resistance for this stock here. So it might make a move up to the 50-day moving average, but that 50-day and the 50-day moving average, that's going to be almost like a ceiling for the stock. Just think of resistance as a ceiling. It might get up to that level.
Bump its head.
Yeah, kind of like what Tesla did right around the 300 level. So Alcoa, it's
We'll have to see. But if it can clear that resistance, then that would signal an improving health. Thank you so much, Harold. All right. Gentlemen here would love your ticker suggestion. Rivian. All right.
Okay.
Coming off the bottom.
Fantastic. Thank you so much for that. Ticker RIVN. So yeah, we were on Tesla. Now let's go to Rivian, one of those young gun EV stocks trying to make a stand here. Chris, what are your thoughts on this chart? I'm going to go on over to the weekly. It's found a bottom. It's trying to move up.
It looks like it is kind of building a cup with handle, but it's below the newly emerged 200-day moving average. So, you could, if it really starts moving with some volume, you could maybe start building position. But for me, I would want to see this get above the 200-day and then consolidate, then start looking at it. And even now, this doesn't have the fundamentals. I know that they're rolling cars out starting right now, but the estimates are just not that great.
All right. Well, Tesla for now does seem like that EV stock we're keeping an ultra close eye on. Justin, let's take a look at MUSA, Murphy, retail super mini markets, but convenience stores, gas stations. So a little play on that. This is from our virtual audience.
Yeah, so this is one that's been holding up pretty well. The super mini markets have been one of the strongest groups, and Murphy USA is one of the standouts there. It's pulled back to the 50-day moving average line. Not too bad of a pullback, pretty orderly, so I think this is one that could potentially be setting up. My one concern, while the relative strength is great, this has actually had a pretty big move already, so you got to start wondering, is this potentially getting tired?
All right, thank you, Justin. Any other tickers from our audience? Yes, you, sir? LNG. Thank you very much. Harold, let's take a look at this natural gas stock. It's about flat for the week, maybe a little bit of a wild ride recently tied to that underlying commodity, but a strong move since July.
Yeah, what I like about LNG right now is the last, it looks like the last 4 weeks, you got some very tight trading. So it really hasn't gone up much, hasn't gone down much, but you see the closes. There's a horizontal bar. That's the close for each week. When you see the closes about the same, that's a very bullish sign for the stock. So
yeah, especially when the market's been
right.
tricky,
so
tough.
Relative strength that we talked about earlier, this stock is showing that type of relative strength. That's something you want to see in a market like we're in.
All right, this is buy, sell, hold, pass, short answers here, guys. Celsius, Chris, CELH.
Hold it if you've got a profit and watch it if it starts moving again and rebounds off that 50-day.
All right, Justin, LULU.
Yeah.
I have a trend line here on the weekly chart. That's something, right?
Watch. Let's see if it can hold that 200-day.
All right, I know I made it hard for you with one word. You can do one sentence. How about that? I'll let you guys have a little bit more.
Okay.
All right, AXNX, Herald's Medical Systems Equipment. This is the same group as Shockwave that we've been talking about, SWAV.
Hold if you have a position in it, watch if you don't.
All right, we've also got ULTA. Chris, what do you think?
Let me see if I can type it in.
I think the silence says it all, right? Next, let's go. We'll give you another chance. Peloton. We'll get to Peloton right after Hilton HLT, Chris.
Well, that one was setting up and looking interesting a couple weeks ago. Or no, I was thinking of Hyatt, not Hilton.
I was like maybe setting up as a short.
Right. This one is, pinned below the 40-week moving average. It's moving lower today. Actually, it could be a short, but with the Fed, I would be reluctant to make a bet one way or the other ahead of it.
Okay, a couple quick more, just because we're in this theme. LVS, Justin, Las Vegas Sands, breakout, fake out.
Well, the fact that it's got that flat base above the 200-day moving average line is intriguing. Maybe a bottoming base.
All right. And then, Harold, let's have you go to Peloton before we get some quick final thoughts from the crew.
Peloton looks a lot like Square. No.
Enough said.
So, yeah, in a downtrend, we want to be focused on stocks in an uptrend. Like that, if we want to be making money,
Below $10.
buy it when it's going up, right? All right, and then we'll sneak in one more. Go ahead. AMC. All right. Yeah, how can we go 90 minutes without talking about a meme stock, right? Chris, AMC, your thoughts?
Let's see. Wow.
It looks memey, pretty memey. You can get some big moves both directions from this one.
Yes, but it is clearly in a downtrend. Looks terrible. Gapped, about a month ago or so. And has been going sideways. Not one I would touch.
If you're an option trader, it's very volatile. You look at the implied volatility.
Yeah, you have that pulled up right now. Thank you for that. Okay, we've got one sentence each on your final market thoughts and then a final ticker that you think would be good for the audience's radar for their watch list as we head into this Fed announcement later, looking at the Qs up about 0.25%. Chris, your final thoughts today, quickly.
I would be surprised if the market really responds positively and begins an uptrend from here, but it may. I would, as far as tickers, we talked about, at least at the beginning, Vertex. I would keep an eye on the biotechs. They're showing a lot of strength, NBIX, CRISPR. There's a number of stocks that are looking good, so watch the biotechs.
Justin, your final thoughts real quick and how you're positioned, anything you would be buying if we do get a positive market reaction.
Right now I'm positioned light, and I'm okay staying light for a little while just to see how things end up after the next few days. Right now, maybe a ticker symbol to keep an eye on is your money market fund.
CASH. Right. All right, Harold, final thoughts from you to wrap up the show.
Final ticker, HES, H-E-S. Want to take a look at that. And then as far as the market, patience. There's no need to jump in. Just have some patience.
All right, thank you so much. And thank you, panel, and thanks to our awesome audience. We're going to get the show up here soon, and make sure you keep an eye out throughout the day for continuing coverage from the IBD crew and the other great sessions at the MarketWatch Best New Ideas in Money Festival. It was our pleasure to be here, and we will see you right back here tomorrow morning at 9:30, and we will be joined by Jim Ropel, hedge fund manager and longtime friend of IBD, very like-minded strategies. He's going to have some tips for us about how he's been handling the current market, so looking forward to that. Thanks so much for joining us, everyone. From Allie, Harold, Justin, and Chris, signing off. Until tomorrow. Yeah, there you go.
Can you unplug? Hi there. Oh, good. All right. What's your name?